Moving on and tracking some other top global stories, Donald Trump is now threatening a new front in the trade war with China, this time over cooking oil. Now, in a Truth Social post, Trump accused China of economic hostility.
Interview that Trump's move hinges on China's new export limits on rare earth minerals, which threatened U.S. tech and defense industries. Trump and Xi are still slated to meet later this month, though that could change as tensions rise.
That's true. Moving on, Federal Reserve Chair Jerome Powell has signaled the Fed may soon end its balance sheet tightening program, which is a key step that could pave the way for eventual rate cuts. Powell says that the central bank is nearing the point of stopping bond reductions as financial conditions ease, but he has given no firm guidance on future interest rates. Let's go across and listen to his comments.
Goods price increases primarily reflect tariffs rather than broader inflationary pressures. Consistent with these effects, near-term inflation expectations have generally increased this year, while most longer-term expectation measures remain aligned with our 2% goal. We could have, and perhaps should have, stopped asset purchases sooner. Our real-time decisions were intended to serve as insurance against downside risks. We knew that we could unwind purchases relatively quickly once we ended them, which is exactly what we did.
But the four major American banking majors, JP Morgan and Chase, Citigroup, as well as Goldman Sachs and even Wells Fargo, all posted strong earnings in Q3. JP Morgan earnings beat the street estimates as the lender records a rise in the profit in the third quarter. Trading division gain and recovery in the investment banking fees did also see a boost, when JP Morgan also revised its interest income forecast upwards for the year. But it wasn't just JP Morgan, even Goldman Sachs also reported robust gains in the investment fees. The figures in fact jumped 42% on a YY basis to $2.7 billion, about $500 million higher than what was anticipated. The lender's profit rose 37%, while the revenue was up 20%. Now, both profit and revenue also beat the expectations, but when it comes to Citigroup, it was a good Q3 for them as well. Higher revenue across their divisions aided the company in the third quarter. Revenue of trading as well as market segments particularly stood out this time around, and it was the best ever third quarter for the market segment, and trading revenues did rise 15% on an annual basis. Profit, meanwhile, also increased 16%. Now, Wells Fargo's profit also beat the analyst expectations to come in higher by 9% on a YY basis at $5.6 billion. But do remember that this was the first full quarter that the bank was free from the asset cap placed by the Federal Reserve. In fact, going forward, the company hiked the target for its key profitability metrics too. So all across the board, very good set of earnings when it comes to the banking majors.
Absolutely, Srishti. Very good set of earnings coming from US banking majors, but we also have Indian banks that are going to start reporting their numbers over the weekend. So let's see, how that pans out. But on that note, we'll take a very short break. We'll be right back with more news and updates on the other side.